Welcome back to the TD Ameritrade Network. Let's talk some cars. Tesla with numbers sending the shares down 15%. Sorry, misspoke ahead of the break. A line down 23, but still a rough day for Elon Musk's automaker. Let's bring in David Kudla. He's a CEO and Chief Investment Strategist at Mainstay Capital Management. Then we're going to do some trading with our own Tom White here in studio. David, so the response is pretty sharp. Tell me what you see as being the biggest negative here. Is it just the fact they lost almost $500 million?
Well, I think that's the biggest problem is, Elon had a couple of hurdles that they did surpass in this past quarter. They were able to raise cash again, which was important to shore up the balance sheet. And they did show that they could produce 95,000 cars in a quarter. But what we thought we'd see is they traded volume for profitability. And I think what most analysts are looking at, investors, Wall Street in general, can this car company ever have a sustainable business model? The growth story is really over. The shine has come off of it. We're looking at now is can they have a sustainable business model? Can they get to a point where they have a profitable year, even a profitable quarter going forward? Losing $400 million in this quarter, we keep getting the promises of profitability ahead, and then we don't see it. And that's really the main concern. I think the liquidity issue might be solved for now, but at some point they have to be able to make money.
The liquidity part is one of the encouraging signs here, right? The roughly $600 million in free cash flow. Last quarter they lost almost $1 billion in free cash flow. It was a negative number, I should say. Is that an important kind of lifeline to give them more time?
It gives them more time, but they're essentially still on a cash burn rate. And I don't think that, investors in Tesla aren't looking for a company that, when we look at their free cash flow, when we look at cash on the balance sheet, they're really looking at can this company maintain a growth story? And we're looking at CapEx is coming down. I talked about several months ago, I came out with this line of that we've passed peak Tesla. We think we've seen the high in stock price for Tesla. We think we've seen their most profitable quarter. We think now we've seen their highest high-end CapEx. We really are seeing a company that when we look forward, we have the aging Model X and Model S, and we saw what happened in this quarter. Essentially, the Model 3 cannibalized sales from the Model S, and that hurt them in terms of margins, in terms of gross margin, in terms of profitability, essentially. So and going forward, there's no minor, or certainly no major or minor refresh for the Model S and Model X. We just have the Model Y on the horizon, which is modified Model 3 with the same kind of economics. What's the story for this car company going forward that gets them to a sustainable business model? We really still just don't see it. And all the while, the competition is coming. It keeps coming.
So, David, I want to come back to this real quick about the cannibalizing part, because I think this is important, and I want to see what you view as the most damning evidence of that. Is it just the big jump in Model 3 production and then the Model SX, being down from a year ago?
Yeah, it's interesting to look at California, because that's a bit of, really been a bellwether for Tesla. 40% of Tesla sold in the U.S. are sold in California. And you look at what's happened to Model S and X registrations in the state of California, and the drop in this quarter alone was astronomical. And that just shows the waning demand for those luxury models. And look, in the car industry, and we know this here in Michigan, you can't let a car go 6 or 7 years without at least a minor refresh. You have someone with one of those cars that's 5 or 7 years old, and they've got an Audi e-tron coming, or here, Porsche Taycan later this year, a new shiny thing that they can buy for around the same price, a little bit more, a little bit less. It's just going to be tough to continue to sell that aging model, and they're not selling that many of them now, really. And really, the problem they have right now is they're cannibalizing their own sales with the Model 3, which is a lower margin vehicle.
Yeah. David, right now, does this all mean to short the stock? When you say the highs are past us, are you betting against Tesla and Mainstay? And if so, can you give us an update on how?
Yeah, we're continuing. We're still short the stock. When you look at the earnings estimates going forward, valuations at somewhere around 100 times. It just doesn't make sense in the car business. I know people still want to think about this company as a tech company or an energy company. They're not spending the money. Their CapEx numbers are coming down. They're not spending the money to innovate. There's really not a growth story here. So if there's not a growth story here, it shouldn't be valued as a growth company. At some point, it has to be valued as let's say a car company, and those multiples are somewhere between 5 or 6, maybe up to 15 or maybe even 20, for some of the luxury, the prestige cars that are out there. And this company just has so many problems.